Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking energy on EIA day for crude oil stockpiles. So let's talk about crude oil. Crude reversed, being up 70 basis points or just under 0.75% prior to the EIA release, to below 50 basis points on the close, down about 54 basis points or 0.54%. Went down as low as 60.11 after the EIA report, which would put it down just under 1% on the lows. So let's talk about that EIA report. We saw a 5 million barrel build in crude oil stockpiles, much larger than the 2 million barrel build expected. We saw an 800 barrel build in the Cushing inventory area, the Cushing storage. Now that's the first build in Cushing in 3 months, so that was significant as well. And we also saw production in the U.S. jump to a new record, 10.38 million barrels a day. So we're now up over 2 million barrels since the beginning of 2017, so that's pretty significant as well. All of that pushing prices a little bit lower after the release, and then keeping prices kind of check as we bounced off that 60 level again with that low of 60.11 were gasoline stockpiles. Gasoline stockpiles came in at 6.3 million barrels of a draw. So we lost 6.3 million barrels of gasoline, showing consumer demand for that particular refined product. And that was also much more than the market expected. The market was expecting a draw of only about 1.2 million barrels of gasoline. So that was a pretty dramatic draw. And that's kind of kept the base in crude oil prices for today. Now, on top of that, we saw refinery utilization fall from 89.8 to 89.5. That's not much of a drop, but we are well below maximum refinery capacity of over 90%. We saw 95% refinery utilization prior to the hurricane season last year, and now we're again below 90. It was expected to fall to 88 with some Midwest refineries beginning pretty early some of their turnaround maintenance, and this is part of the reason for the buildup in crude oil when you've got refinery levels and utilization below 90%. That is expected to bump up, and also the seasonality still playing out. March tends to be seasonally weak in toward the last 2 to 3 weeks of the month, and then we tend to rally in toward June. If some of those refineries come back online prior to full-on summer blend maintenance beginning in a month or so, then you'll probably see some of this drawn out. And with the build in Cushing, we're not seeing stockpiles below the 5-year average at this point. This is Bob Iaccino talking about a lower crude oil contract from the CME Group trading floor in Chicago.